I'm Michael Fox, and this is the Prospector News Podcast. And I have joining me today David Erfle of the Junior Mining Junky, and we're going to look at the precious metals market. Welcome, David.
Thanks a lot, Michael. Thanks for having me on again.
Not a problem. So September was kind of like August. It was pretty crappy.
Yeah, and we also had an interesting anomaly at the end of the quarter. We had the last day of the quarter, the last day of the month, and the last day of the week on a Friday. So it all wrapped up then, and the Bears were able to break that $1,900 floor and run those stops, and that conveniently went into the next week being gold week in China. And so with Chinese buying off the market, Chinese buying was keeping the gold price up. Chinese buying and central bank buying was keeping the gold price up. So with China closed all week, that was the Bears being able to run those stops and the bullion banks be able to cover those shorts and move the gold price all the way down to its rising 200-week moving average, which had risen to about 1820, and that's about where it stopped. It stopped at 1823.
Yeah, there was lots of fear there that the 50-day and the 200-day were going to pass each other and send gold into a bit of a free fall, but the trapdoor stayed closed.
Yeah, absolutely. Very interesting. We had gold go below its lower daily Bollinger Band, close below its lower daily Bollinger Band 8 consecutive days, and the Bollinger Band is an algorithm that was designed to keep the price within that upper and lower Bollinger Band 95% of the time. So it's a statistical anomaly for the price to close below its Bollinger Band 8 days in a row. I think gold hadn't closed 9 days in a row. The gold price closed 9 days in a row, and it hadn't done that in 7 years.
Yeah, there's lots of reasons why September was just plain bad. Silver was the same, but it didn't seem to fare almost as badly as gold did.
Yeah, it just they pretty much flipped the switch. Usually silver leads gold in breakouts in both directions, and this time gold broke down first, and then silver broke down the following week. So gold lost 1900 in the last week of September, the last week of the quarter, and silver didn't lose 22 until the first week of October. And we had the miners and silver going lower, and we had the miners also uh, test its lower downtrend line that it's been, that downtrend since April. Basically, the last 2 years, and gold stocks have peaked in April, and then the trap door opens up, and tax loss selling begins in May and comes down and into September. And we had a major bottom in September last year in the gold stocks, and we may have seen a bottom this week also in gold stocks.
Yeah, I was at the Silver Symposium in Las Vegas over the weekend of the 30th to the 1st of October. And someone brought up an interesting chart. I'll just discuss it just briefly, but the last 2 years, and 1 year the event was at the end of August, and the other event, the other year the event was at the end of, September, first part of October. But coincidentally, the Silver Symposium marked the bottom of the market for silver in both those years. So hopefully we're going to see that trend carry on for a third year and have the markets bounce off of that. There's
Yeah,
no
well, that would be
causation
nice.
to that, but it's just one of those coincidental things that you kind of look at and hold your breath and hope and hope that the silver gods are right, and that's what's going to happen again.
Right, and then also if you want to look at conference catalysts, usually, when we have the Beaver Creek conference, which we had recently in the middle of September, gold starts selling off even more after that conference, and that happened again.
Yeah, it's funny how these trends kind of coincide with the conferences. We have the so-called PDAC curse that occurs every year within a few weeks of the end of the PDAC, where the precious metals start to to fall off as well. But again, it's probably more coincidence than it is causation. But makes you stop and wonder sometimes.
Absolutely.
The miners, they didn't hold up anywhere near as well as the metals did. They were off dramatically over September as well.
Yes, we had like I said earlier, we had a major bottom in gold stocks in September of last year. That was the 7-year gold cycle low. Every 7 years since 2001, gold stocks make a major low. But the juniors didn't participate in that major low. I mean, even though we had the GDX, we still have the GDX and GDXJ still up over 30% from that low. A lot of these juniors continue to sell off on decreasing volume as well. So yeah, I mean the gold stocks, just people do not want anything to do with them here. They're getting 5% yield on treasuries. We're not seeing any panic in the stock market. We're seeing the dollar continue to climb. We've seen rates continue to climb. So there's really no reason for people to own gold. That's why we're seeing these ETF withdrawals continue. But it's basically Eastern central banks that have been keeping the gold price up.
Yeah, I have this thing with the stocks. I keep thinking it's like that movie or play, Waiting for Godot. That's why I feel like for the investors in that sector, they're waiting for Godot to show up. Unlike the play, I'm pretty sure he will show up at some point, but I'm just not sure when. What's your take on that?
Well, the win, I think, is we still need gold to have a floor at 2000 as opposed to now an almost 13-year ceiling at $2,000. And we also need to have some fear come into the hearts of stock investors. The stock market has to come off, and people have to start getting defensive again. So this is why you're seeing the gold price continue to move sideways, and gold stocks continue to get cheaper in relation to the price of gold because the inflation is rising the cost to basically do everything associated with gold for these miners. Everywhere from exploring it to getting it out of the ground. So until the gold price makes a monthly close above $2,100 and investors start to feel that $2,000 is a floor as opposed to a now nearly 13-year ceiling, the gold stock arena is going to continue to be treacherous.
Yeah. Now, at one point, you had discussed that one of the key indicators that you thought would be the 10-year Treasury getting at 5%. And it dabbled with that towards the end of September a little bit and then backed off.
It did, yeah. It looks like there's a daily double top around 4.8, and the 2 years now back below 5. So the U.S. dollar is also showing signs of topping. I mean, the U.S. dollar was up 11 consecutive weeks in a row and got extreme overbought. So at the same time, of course, you had gold extreme oversold. So the U.S. dollar, I think, needs to get below 105, 104 on the DXY. And I wouldn't be surprised to see Treasury start to roll over. Also, that would also be a catalyst for the gold price. But yeah, I mean the 10-year getting above 5% and staying above 5% would bring black swan events into play. And look what happened over the weekend. We had this incredible event happening in Israel, which is basically that they've come out and said that it's their 9/11, and U.S. warships are on their way over there, and there's a hostage situation. They've said they're going to kill one hostage for every attack. It's really, really bad. You never want to see the gold price go up for these reasons, but the reason why the gold price is now knocking on the door of 1900 again. So yeah, things are really starting to heat up.
Yeah, there is that old saying, the world burns and gold turns.
Yeah, exactly. Yeah, but you never want to see the gold price go up for geopolitical reasons, because
No,
that
that's
affects us all.
It does, and it's not the good reason for it to go up. So, do you perceive this as we start to look forward into October? Do you perceive this as being a short-term spike, or is this going to linger as long as the conflict there lingers?
Well, I think if the conflict ratchets up, I mean, the question now is brings into play Hezbollah. You know, will they open up a northern front on the war? You know, if Israeli troops enter Gaza, then Hezbollah's response to a massive Israeli ground operation, I mean, that would most likely pull them in as well. So, this could and this will bring in the West. You know, and you'll have the U.S. involved in in Ukraine. You have U.S. involved in Israel, and there's the potential of China and Taiwan over there, on the horizon as well. And China is openly supporting Palestine. So this all does not look good, for the future. And then on top of that, you've got the most contentious, um, uh, that presidential election in history. I mean, the leading Republican candidate has three indictments and is going to probably be in court until the election. And then on the other side of the aisle, the sitting president and leading Democrat candidate is being is under impeachment proceedings by the Republicans. If they could get their act together and figure out what they're going to do about a speaker. They've also said that they're going to try to put through impeachment proceedings. So this all does not look good for 2024 for as far as civil unrest. As far as the election being accepted by either side, whoever wins. It's really a big mess, and the gold price reacts the strongest to lack of faith in government and lack of confidence in the Federal Reserve. And with what's going on in the marketplace, and Fed officials basically coming out and saying, we don't need to raise rate hikes anymore because the bond market is slowing down the economy for us. Um, I don't see the Fed being able to raise rates again. I mean, the Fed funds rate is already a percentage and a half above the CPI rate. We're going to get the CPI tomorrow. We had the PPI today. It didn't move the markets much, and we had Fed minutes, which basically supported another Fed rate hike. But Fed officials have come out since then and basically said, no, 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 we don't. It doesn't look like we're going to need to raise rates anymore. So the gold price really didn't react to it. It's continuing to bounce higher. But unfortunately, as far as the miners are concerned, if you take a look at the volume associated with this bounce, it's happening on low decreasing volume. If you look at the similar circumstance where we had back in March, where we had gold bounce from the same level at 1810, and which created a bullish island reversal in the GDX. A similar island reversal was created here also this week, but it was associated with huge volume back in March because it was an economic response. The gold price had an economic response to what was happening with the regional banking crisis. This is a geopolitical response, which the stock market is basically ignoring as it goes higher.
Yeah, there seems to be a disconnect between what you think should happen and what is actually happening here in the short term as far as the market reactions go. But the old saying, the markets can remain, crazy longer than you can remain solvent. So we'll have to see how long that's going to shake itself out. But given the Fed, given the politics, given the geopolitics, timing is about right for those investors that want to see how all this is going to play into the precious metals markets. Our mutual friend Brian Lunding has his New Orleans Investor Conference coming up here, the 1st of November to the 4th of November. As you know, Brian has a lot of really high-end speakers who are experts in these areas at his conference. I know you've been there in the past. Are you going this year?
No, no, I'm not. I've pretty much minimized my conference going. to where basically I attend the Beaver Creek Conference and I attend PDAC. They're 6 months apart, and I get to basically speak with all the companies I'm invested in and all the companies I'm interested in at each one. I've got a 10-year-old son, and I'm really enjoying being with him, and I want to be with him as much as I can. And my wife has a very demanding job, so I can't really leave the house for any length of time that often.
Well, that's fair enough. But for those investors without the 10-year-old son and the wife with the demanding job, New Orleans could be a very good place to get a handle on how everything might affect the precious metals markets. I look forward to chatting with you again at the end of October or shortly after that conference, and we'll see what shakes out here in another 30 days.
Okay, Michael. Look forward to speaking with you then.
Thanks, David. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.